Welcome to another digital roundtable from NuWays. Today we have PORR with us today, and we're happy to present Mr. Clemens Eiter and also Lisa Galuska from PORR, and we will have a little presentation on the first half-year results, but also on what is PORR actually doing and some highlights here and there. But first of all, let me start with some organizational stuff. If you have questions after the presentation, you're more than happy to ask a question. You can ask them directly in person, then I will give you ability to speak, and you can turn on your microphone, and also if you want your camera, and ask questions directly. But you could also use the F&A or the Q&A function or the chat function provided by Zoom. However, we prefer that you ask your question directly, which gives our roundtable here a bit more personal touch. Then with that, I think we're ready to start, and I would like to hand over to Mr. Clemens Eiter for the presentation. You're welcome.
Thank you very much. Warm welcome here from Vienna to our roundtable. I'm pleased to give you an introduction and overview of our group. I'd like to start with our picture here, PORR in brief. You know, we are a construction company, pure construction player, doing everything for buildings and infrastructure, beginning from design down to demolition. So we do the whole cycle, which is important, especially at these times, not being much dependent on subcontractors, and we're doing everything which gives us a lot of resilience to what is happening in general to construction. Probably, if you have a look into the news, you see for the probably last 1 or 2 years struggling. But actually, the struggling is mainly focused in construction on residential construction. And as we have a big portfolio and residential construction is below 10%, we are not really suffering from what's going on. Actually, developments now are making us stronger, as something around 60% of our activities are concentrated in infrastructure. And in infrastructure, actually, we see a different picture. We see something like big demand and ongoing demand, nearly in some markets like a boom, where we have really good expectations and also good development in the past year. We are a company of about 20,000 employees, had an output of more than 6. Makes us one of the large European players in construction. I think we are something like number 15 of the large construction companies in Europe. And our special USPs is our focus, as I said, 60% almost in infrastructure, and also our geographical setup. You see here the map. You see in yellow our home markets, where we're doing all our activities and are one of the main players. This is our strategy to become actually a top 3 in these markets, as market share and market position is an important factor for being successful and profitable in construction. And actually, a setup like that, you will see we're doing the DACH region and CEE with Poland, Czech Republic, Slovakia, and Romania as a top player is something unique. Only Strabag, as one of our competitors, has the same setup, and it makes us gives us the ability to benefit from the trends here, as the CE countries, especially Poland and Romania, are benefiting from the infrastructure need and do have the best expectations and outlook in the next years. Romania, for example, road construction and railway construction with the subsidies by the European Union, the European Resilience line gives here really a boost. They are having in Romania now something like 1,000 kilometers of highways and heading for 2,500. And based on that, in the past 3-4 years, we were able to improve our output there from 100 million to 400 million. So there's really strong growth there and still good expectations for the future. We have similar good expectations in Poland, especially now where we have a new government that has good relations to the European Commission and still strong infrastructure need in roads, in road construction, in railway going forward. Based on that, we've seen a plus of 40% in the first half year in 24 in order intake in Poland, still with good expectations. Also, the DACH region, especially Germany, has a lot of infrastructure renovation need. German Railway announced a big program also for highway. There are a lot of bridges that need to be renovated, and based on that, there should be good demand here in the future. Same here in Austria. In Austria, we have a #1 position shared also with Strabag, and we have a long history here of not only big output but also stable income. It's the backbone of the group here as a market leader with a long history of more than 3% earnings in EBIT here. This is in general our target to reach an EBIT margin of 3% by 25. After big growth in the years 2010 to 2020, we're now in a consolidation where not output growth is the first target of the group, but growing our bottom line. And I think we're pretty successful as we've been improving that, starting from something like 1.5 now to 2.3% EBIT margin in 23, heading forward, as I said, to 3% in 25, where we reach a top group here. So you see strong growth in profitability based on our special USB in composition of our activities and the geographical setup with the best markets here included. What are the trends that we believe in and we are building our future? First, we all know decarbonization is one of our big trends. How can we provide and benefit to that? Actually, we do have a special USB for energy transformation, especially in building power plants, pumping power plants. And last year, about 10% of our order intake was coming from that field where we're doing power plants in Austria, but also in Germany, also pipelines. For example, the biggest power line in Germany that is being constructed from the Northern Sea to Bavaria, so-called Südlink, is powered by PORR, as we do special tunneling services there for going underneath the river Elbe. We are also market leader in Austria here for geothermal energy. We have a big pipeline here of buildings going forward. So energy transformation is one of our trends that gives us demands and good outlook here for the future. Another special USP is our industrial construction. We serve, for example, BMW as one of the big companies in an automotive, doing good business, something like the fourth contract there in a row. We're also in pharma there especially. And in general, we've been improving our share of business in this part from 20 to 30% in the last years. And that's very important because these customers are stable customers, and they're paying good margins, as their need is primarily quality and time restrictions for the construction there. So you don't have so many competitors, and it's a good field for earnings there. Also a trend in digitalization, especially, is data centers. We all know that artificial intelligence will grow in the next years, that will need physical resources that are provided by data centers. We have good history, track record here of doing construction for Google, for Microsoft, for Vantage. New contract also here in the last half year, and that's trends going forward that will support our growth and profitability. Also, an important factor is the demographic change, especially the need for medical centers, for hospitals and rehab clinics. We are doing hospitals in all of our regional markets here. And as you might know, we are here in an M&A transaction for Vamed, one of biggest companies in Austria in this field, also giving opportunity of growth here for the future. Quick look at our strategy. We are focusing on intelligent growth, means not growth primarily in output, but on bottom line. We're doing that with green and lean. What's green and lean? I think sustainable construction is something that I don't probably need to explain. We're heading for sustainable construction. We are one of the leaders here in Europe. Generally, we do have the best ratings along the sector, and we are developing here pretty well going forward on that way. And what is important for us is lean construction. Lean construction means that you best organize your construction site. It's something going back in the industry that started Toyota, so best efficiency. And actually this should lead, and we're on the way to optimize, especially quality and time for our customers. In our best projects, we're able to reduce our construction time up to 25%. And I see from that example, you see that this is really an important initiative, and therefore based in our strategy to improve here, to improve our comparability to our competitors here. And actually it's paying off, and we're rolling that out through the whole company, and that's a difference to other construction companies. They mostly do it on special sites, but we're rolling that out through the group, and we're sure that our competitiveness will benefit from that. Staff is an important factor. As staff is limited, actually the most important thing is your brand there, and we've been building on that based on our principles that we're living here, our PORR principles, for many years. We're doing education in our markets for years now, and we also use to bring workers in from outside to our company from other countries. For example, we brought Indian workers that were working for us in Middle East in the last year to Europe, to Romania successfully, and therefore improving our workforce. And based on all the measures, we are convinced that we do have the employees and people for our order backlog and for our growth in the future. Yeah, based on this general introduction of what we're doing and what we're heading for, view on our half-year results, I think we did pretty well. In general, I have to say that construction, especially residential construction, is still suffering from market conditions, especially the high interests that are limiting financing in this field. Although I have to say there is big demand also in residential construction, and with lowering the interest, with the interest coming down, we are sure that also this field of construction will rise again. I will show that on the next slide. Also the prospects here of Euroconstruct and the market here are pretty well. But in general, we've been seeing in the construction a little bit of downturn too, aligned with general economics. But now we see a turnaround. So we see a turnaround in order intakes and also our order backlog growing. Actually, we're still fully booked. We have the third highest order backlog that we have in history, and we don't have to worry about our output and production here in the future. Most important thing is that we do not only develop on output, but also on profitability. We increased our EBIT compared to previous year by almost 25%. And reached an EBIT margin by half of the year of 1.5%. That's something that 2 years ago we had by year end. So you clearly see the development of our profitability and margin here. Balance sheet side, still solid balance sheet with an equity ratio around 20%. Although we decreased our share of hybrid capital and had a repayment of 40 million in the first half year in 24. 19.4% is an increase of almost 1% compared to last year. We've been improving our net debt position over the last 3 years, and we have a stable liquidity cushion going on forward, still around 700 million euro. That's really a stable cushion, almost 20% of our balance sheet. Although we're already at mid of the year here, we did some selective acquisitions to expand our value chain and our local footprint, as we also announced to do so as opportunities to grow that are fields here with strong opportunities in growing here our performance. Based on our outlook and our market position, we confirmed that we will grow in output, but also in earnings for 24. So still on the way, on the path to our 3% EBIT margin goal in 25. Look at, here I wanted to give you what is Wall Street Online also saying here. The only answer to the outdated European infrastructure, continued climate change, and the increasing excess of age of the European society will be to invest, to construct, and to renovate. So it's summarizing what I said before, that there's big demand actually from all the important trends that we are seeing in the economy now. Here you see outlook for the market on the left side based on Euroconstruct. You see actually downturn in 24. You will see on our figures that we are not into that, as we have a special composition of our construction activities. The only part here in deep blue that's growing is civil engineering, and as I said, we're something around 60% in civil engineering. This is what you see on the right side here. That's our PORR figures, also in deep blue, our order backlog. And based on that, still good growth expectations. The light blue part is building construction, the non-residential part. As I said, we're growing here to 30%, strong profitability in this part. Growth of you see 276 million compared to previous year in order backlog, so growth in the right field. And residential construction, you see that in yellow, with a big downturn in light blue, sorry, of 6% in 24, but going forward also growth expectations as in all the sectors that Euroconstruct is giving an outlook here. And we should be able to benefit on that. And as I said, third biggest order backlog in history, with already a turnaround here in second quarter, up now to 8.6 billion euro. Our order intake decreased compared to previous year, mainly because we had strong order intake in tunneling infrastructure in the first half year last year. So there was one, let me say, exceptional contract with almost 500 million euros last year. And this is something that we did not want to repeat this year. So the reduction in general is something that's on purpose based on that. For our other segments, you see that in Germany and in Poland, we had an increase of more than 40%. So in the field and in the lower contract volumes, we're still growing, and that's good development and healthy for our future here too. Here you see a picture of the last 4 quarters of our main order intake in the different fields. You see that it's a good mixture. The deep blue boxes are standing for infrastructure. You see infrastructure ongoing actually in all our fields. You see in Q3 23 what I was talking about, that the energy transformation, pumped storage power plant here in Ebensee, Upper Austria. Others here are mainly road construction. In Q2 24, you see AG BSB Limberg. That's also a power plant construction here in Austria for Verbund, the main energy company in Austria. You see data centers in lighter blue, waste to energy plants in Poland, airport terminal here in Poland. So a lot of contracts in industrial engineering, but in the end also some residential construction, for example, in Germany, apartment building Quartier Garstedt in Q1 24, but also apartment building in Bochum in Q4 23 in Germany. So a good mixture of contracts going forward. If you look at our production output, I think you see a very strong development over the last years, with an average growth rate of 7.7% over the last 3 years, starting from half year 21. Actually, this was the first year past COVID in our trends. So really a good growth here, especially in our CE markets. You see again this year 38% in CE, as I said, in Romania growing from 100 to 400 million over the last 3-4 years. Also in Poland, actually in 2020 we did something like around 400 million of output. We're doing 1 billion now. So this is how you see we benefit from the infrastructure needs in these markets. And as we are one of the only companies here located with that market position, that's still further growth potential. On the right side, you see the development of our earnings, of our EBIT. You see that in 21 half year, we've been at 0.9%. Now we are up to 1.5% EBIT margin. So you see the strong increase. And good thing is that bottom line earnings per share are increasing by 45% up to 45 cents in the first half year in 24. Look at the input cost. Actually, you see now after a big growth of construction costs that you probably all recognized, of something around 25% in 2 years that we've seen up to 22. Now the input costs and the construction costs are stabilizing. That's good also for the development in the future here. And you see on the right side that this is reflected in lower material costs in COVID and after COVID, beginning of war in Ukraine. We had strong increase in material, especially in steel. They've been coming down, reducing. On the other side, we know that we have the inflation, especially on labor and our subcontractors. But you also see, if you look at our P&L, that we're able to manage that. And actually the increases in labor and in subcontractors is easier to manage as they are connected to the inflation and can be reflected either in our calculations or in our inflation and indexation clauses in our long-term contract. So they're safeguarded by our policy there. Look at the balance sheet. We reduced, as I said, our hybrid share to 25%. We did a refinance of our hybrids of 135 million in the first half year. As this is first repayable by beginning of 29. We safeguarded our equity ratio of around 20% for the next years here. So we have a safe equity position now, not depending on further equity going forward. And our net debt position on an operational level still reducing. By end of the year, we see a net cash position, especially our public clients are paying much in December. During the year, we are going for some net debt position. You see that's by now 300 million. And if you take off here the IFRS 16 rentals for offices, we would still be net cash. So I think our position also net debt wise and development is pretty fine. We did some smaller M&A, as I said, to save gravel resources, which are a key factor in our industry here near Vienna, which is the biggest market in Austria. So saving here our market share on one side. On the other side, in Germany, we did acquisition of a road construction company with good margins, here improving our regional footprint and coming along Stuttgart here. So this will help to grow our business in Germany. look at our liquidity cushion and maturity profile of financial liabilities. I start with that. First, on the right side, you see that for our financial liabilities, we have no big repayments until 28. That means actually we're financed going forward till 28. I think that's really a comfortable position and gives us really a stable outlook also from finance side. Liquidity is something 700 million, almost 20% of the balance sheet still, and see that also the banks are believing in our development, as committed cash lines improved to more than 400 million in the last years. So a strong commitment to the banks, and based on that strong liquidity cushion going forward. Summing up our position, as I said, we have the right markets, the right products. We have a strong order backlog. We're handling our cost developments pretty well, which you can see on our development on the P&L. And based on all our activities and outlooks, we're confirming way forward, increasing our output, but also more important, our earnings and margins going forward to our 25 goal of 3% in 25. Yeah, so actually from our side, that was our main picture here, and thank you very much for your interest and attention, and very welcome for questions.
Perfect. Well, thank you also from my side very much for the presentation. So now let's move over to the Q&A questions. If you have questions that you would like to ask in person, please press the raise your hand button, and then I will unmute yourself and give you ability to speak. But also we have gotten some questions in the chat, which we can go through right now. Unless there is a hand going up, then I will go to the active hand. Okay, first one from the chat is, are you active in the planned construction of nuclear power plants in Poland?
No, we're not. Actually, what do we do there is, and we're finishing there, is an LNG terminal. That's something that we're in. We're also evaluating contracts here in Germany too, but we're not in nuclear power plants.
Okay, thank you. Second question from the chat. One is regarding the pricing of projects. How are projects priced? Are price variation clauses for raw materials part of contracts?
For raw materials, we have two strategies to hedge our input costs there. First is that for our main materials, we do the procurement as close as possible to the point where we enter into the contract with the customers. So we do something like a natural hedge as far as possible. For the long-term contracts, you always have also inflation clauses there. And the index that's used is in most of the cases, there is some weighted average between materials and labor there, or general inflation. And actually, also our hedging and our risk mitigation is based on that index. But that's watched and treated very, very closely.
All right, thank you very much. We have one more question regarding the industry outlook. Many industries are facing challenging times ahead and are halting capex or moving it away from Europe. Are you seeing this trend in your order book, and is this a long-term concern?
Actually, we don't see that, as first, around 60% of our clients, of our customers, are public customers. I think they won't move away. And as I've been saying before, actually there are different trends with a lot of demand, and all of that needs building and construction. As I said, demographics change, hospitals, the infrastructure need that we have, the energy transition. So public clients, energy transformation and sustainability. Public clients, I think, have to choose in either they want to invest, but they will and they do invest. So there's a strong outlook from that. If I look to our industrial clients, as I said before, there's one main trend: artificial intelligence and data centers. We're expecting, if this, what we all read in the newspapers, the development there will take place, there will be a boost to that. And actually, every data center, we just won one of that, and they are in most parts they're 100 million contracts there. They're big contracts, and that's a pipeline that will grow. But we also have other clients in industrial construction, for example, pharma. Yeah, we're doing stable outputs there, and actually we have our partners there. There's always demand from them, but also automotive. Actually, if only some part of change to electronic vehicles is done, you will need a lot of battery factories. We're now doing with partners, one in Germany. There are big programs also expected on that. So we also have still demand in semiconductors and see demand going forward. So there are different industrial customers going forward that have the need, and we have the public clients.
Thank you. One question that's sort of a follow-up on that question we just had. I just read it out, but you gave the similar answer already. But how would you expect the infrastructure market, roads, bridges, and tunnels to develop going forward? As you mentioned, everyone is aware of the currently bad condition of infrastructure, but it feels like not much is improving despite that. So yeah, maybe the reluctance of the public sector to actually change the infrastructure that is becoming out of good condition.
Well, I think there you have we have a different view on different markets. As I said, Romania, Poland, now also Czech Republic, they're really investing in infrastructure there based on the European funds. I think you in Germany mainly have your picture in Germany, and well, what I see is that there is a strong demand for renovation in railway and in highways, in bridges there. And there, if the demand would be fully brought to the market, actually, I would expect that you need big proportion of European construction companies to do so. So it would not be possible to do everything there. And what you feel now is that you have a government that's not really taking right care of it. Still, there's, for example, for our market share, it's still enough that's brought on the market. It's just, let me say, very sad for Germany and the German infrastructure that the government is not able to bring more money into this. Actually, I have to say I don't understand it. I don't understand the Schuldenbremse in this regard, as Germany is having really a low debt and could invest more in it, which is needed. But we are not suffering from what's happening, and I think the demand is just can only grow, cannot shrink, based on what is needed for the infrastructure there.
All right, thank you. Next question is Two questions there. Maybe you can ask them at once. First one is, would you consider acquisition for geographical expansions, for example, in France? And also follow-up question from a different person. Which market segments or geographic regions are in the focus of PORR in the next years?
Actually, well, let me say it from the bigger picture. Yeah, Karl-Heinz Strauss, the CEO, entered the company in 2010. At that time, PORR was a pure Austrian construction company. We are now a European player, and Karl-Heinz has been forming a European player in the home markets. Actually, we're acting in an industry with low margins, and to build a market share is something that takes effort, and that most times also takes lower results in the first years in the markets. And as we want to grow now in our bottom line, we're not heading for new markets, as they in general would mean that we would have to take probably losses in the first years. So that's not our focus. Our focus now is something that we did here in the first half year. We're developing our markets and business within our countries that we are now. So we want to increase our market share in the home markets that we are already playing, as we believe that will further lift up our profitability, but we are not heading for new countries and markets.
Perfect. I think that answers the question. If not, please ask a follow-up question. Okay, there's one question. I think it came in on the same time that you gave the answer already. In the course of AI, the construction of data centers has become into a focus. Are you also active in this area? I think you answered that already with yes. So we can go to the next.
We did several of them, and I think we are one of the first movers there, and to have the right references. And actually, that's what we do here. Business development in that field, you know. So starting off, we have a special force now, and plan is not to have a new market with a new country, but to improve in data centers, doing business development there.
Cool. Thank you. Another question is on what used to be maybe a big trend, but has slowed down a little. You just mentioned battery factories. Aren't most of these initially planned projects postponed, with the exception of Hungary? Not many countries are pushing this topic. So what's the feel on battery factories right now?
I think that's right. As in general, what we see is some unclear condition from the political side. But as I said before, my wording, there will be at least some share of e-cars and needed potential here. So I think for the moment, it's true that the companies are in a waiting position. But going forward, I think there's also no other way than to at least invest in some of them. So we're expecting that. And actually, yeah, we've working with BMW for many years now, doing contracts in a row, and we are pretty confident, based on what we understand, that there will also be sufficient demand here in the future.
Perfect. Thank you. Then we have two questions on the same topic. We'll read them both out because they're very similar. What significant risk do you see for the company in the coming years, and how do you manage them? And the second question, how does PORR deal with the current and future challenges in global supply chains?
I mean, in general, risk management is important in a construction company. And well, most risk is coming from the orders that you take in. And what we have, therefore, we have improved our risk management, as we have clear sizes and categories where we are aiming for a share of our business. That means, let me say, 60 60 to 70% of our contracts are lower contracts with lower risk, contributing to something like 50% of our output. And the number of big contracts beyond, let me say, 100 million euros is limited. So we're looking at the risk at our different markets here. And we have a risk mechanism that risk above contracts above 100 million need the consent of full board here. And therefore, it is safeguarded that the order backlog is according to a strong risk management strategy. I had a good discussion with a bank manager just last Friday, where he said, actually, we have the same risk. Yeah, so we are. You put on the risk. You have low margins. Risk map is based on what you take on your books, and well, I think that's the most important factor. And then, of course, we have to manage our cost. That's also part of the question, I understand, with supply chain. Actually, a big part of our supply are subcontractors, and these are done locally. And then we have the big materials like steel, like cement, like concrete, where we do a central, where we have a central approach, also for energy, for the big energy sources, where we have a strategy also with risk mitigation and hedging going forward each quarter, updating what's going on in the markets, what are expectations there. What I have to say is that we're using here only European companies. And for example, to give an understanding of our, let me say, successful treatment and mitigation, when COVID was going down, we had really high economy, and steel need was going up, and also prices. And we were able actually to keep, as I said before, we have a policy that at the point where we enter in a contract, we safeguard big parts of our material to fix prices. And we were able to keep the prices, although the trend was really strong going up, as we've been able to set up alternative procurement lines that in the end made our suppliers stick to their commitments. Yeah. So I think we've been proving resilience in the really high times after COVID and after the beginning of the war for our main materials. I think also proving to show proving to be able to manage the cost, as we've always been increasing our margins here.
Perfect. Thank you very much. Then two more questions regarding the future. I will also sum them up in one take. So what plans do you have to ensure the future growth of PORR? What is the balance between organic growth and acquisitions? And follow-up question on that, what long-term measures are planned to further increase profit margins in the next 5 to 10 years?
Well, I think demonstrated the main trends. We want to benefit from the trends that are paying off for construction, data centers, hospitals, industrial construction, infrastructure in the different markets, energy transformation. So I think there are a lot of issues, and I don't worry about, in general, the demand and the market. I think what we need to do is what we always did, to be one of the best construction companies and work on our quality, be a top provider, and development on our competitiveness, which we do with our lean program. As I said, I think there are not many construction companies that roll that out through the whole company. We take investment in that. And based on that, I'm convinced that we are able to improve our margin. So our target for 25 is 3% EBIT margin. If you have a look at the industry across Europe, you can see that between 3 and 4% is what the top companies are able to earn in our business.
Perfect, thank you. And then two more questions. One is, can you give us an overview of the future dividend strategy? And also how important, it was a different question, but we only have 3 more minutes to go. How important is the environmental aspect in regards to new projects? What are the key levers to improve the CO2 footprint of construction projects?
For dividend policy, I think we showed a stable policy the last years where we want to develop along. So we had dividend payout ratio of about 35%, leading to return or yield of around 6%. I think that's pretty fine also within the industry, and that's where we want to develop along. On one side, it allows us to strengthen our equity and our equity ratio, and on the other side to give a good dividend yield for our investors here.
Okay, and then we have one more question from Mr. Schnitzer, who would like to speak in person. So please unmute yourself, and you're happy to speak now.
Thank you for taking my question. I have a question relating on the water flood. The bridge collapse in Dresden has made everyone aware of the catastrophic condition of all bridges, especially in Germany. How can PORR help? How high is the demand for bridge renovation from your point of view, and what market share could you expect for this market?
Well, I do agree that the need for renovation is very high. I think there's a number like 16,000 bridges for highways that need to be renovated, and Autobahn GmbH itself is saying that they need to bring 400 of these on the market every year. That would need more financial support from the budget, and actually, Schuldenbremse, and the way government is approaching it is not sufficient for that. Maybe the situation now can change that. I have to say that I think that should and will be increased, the renovation and the budgets. How can we contribute? Well, we are already doing some bridges in Germany, and actually we do have resources to do some more, but of course it's not something that we can do alone. So I think we can contribute to it, but in general it will need, as I said before, big parts of construction in general here in Germany or in the region to do that work. But hopefully also for the benefit to the ones that contribute.
Thank you.
Thank you.
I think I missed the question with the ESG.
Yeah, if you have time, go ahead. Otherwise, then we could close the meeting and we will get back to.
Yeah, just one remark to that. What we see is that our industrial clients, especially, are much interested in sustainable construction, and we're one of the leaders there. We have certified sustainable construction sites now in Germany. Besides the buildings, now this is also happening for construction sites itself. Certification by DGNB, which you need know probably from the building side. We already have certified construction sites in Germany. We are going now in Austria to it, and we want to set minimum standards for all the construction sites to be in line with that for sustainable construction going forward as one of the leaders in this field of construction.
Perfect. I think that answers all the questions we've had. I don't see any more open questions. That just leads me to say a big thank you to both of you for presenting PORR, and also a big thank you to all participants who asked questions and were concerned about the case. And that I would like to move over to Mr. Eiter again for some closing remarks.
Yeah, many thanks for interest and time in PORR. All the best for the future, and hope to see you all soon. Thank you very much.
Perfect. Thank you. Bye-bye.
Thank you.
Thank you. Bye-bye.